All right, let's dive right into this explainer. Today we're unpacking a really critical executive briefing, and we're analyzing India's massive energy strategy strictly through the lens of geopolitical trade risks. If you're tracking global markets or, infrastructure investments, India's quest for energy security is a high-stakes balancing act that you absolutely need to understand. We're looking at how they are weighing these urgent short-term demands right against an incredibly ambitious long-term green transition.
So, here's our roadmap for today's explainer. We'll briefly cover global shocks and oil shifts, move on to the vanishing Russian discount, then look at domestic infrastructure defense, and finally wrap up with the 2047 Energy Sovereignty Roadmap.
Okay, Section 1, Global Shocks and Oil Shifts, Navigating West Asia Instability. We're going to start by looking at the immediate disruptions in the Gulf that have basically squeezed traditional global supply lines.
And this breakdown brilliantly illustrates the resulting tactical pivot. Look at this. Russia now accounts for a massive 33.3% of India's total crude oil imports as of March 2026. I mean, that is literally a third of the country's overall oil intake for the month. As their traditional supplies faced all those logistical pressures we've seen, India just rapidly shifted its sourcing patterns to fill the gap.
To put a tangible dollar figure on this macroeconomic exposure, India's crude imports from Russia hit a staggering $52.73 billion during 2024. That's according to the UN Comtrade database. That is a colossal shift in capital flows, and it really reflects just how deeply integrated Russian crude has become in India's energy basket in what's actually a very short amount of time.
But here is the kicker. India currently imports 87% of its crude oil. 87%. Despite some really concerted efforts to expand domestic exploration, which actually scratch that, aging wells have actually led to a drop in domestic production lately, the country just doesn't produce enough oil to meet its booming demand. And that 87% figure leaves its national fuel price stability highly vulnerable to any global supply choke points.
Moving on to Section 2, the vanishing Russian discount, a shift in pricing dynamics. Let's look at the changing economics of these vital imports.
So, initially, Indian refiners were absorbing heavily discounted Russian barrels, and that successfully shielded their domestic retail fuel prices from global volatility. It made perfect financial sense. But today, those discounts are vanishing. We're talking about a drop from previous highs of nearly $30 per barrel down to less than $3 per barrel. Stripped of those initial pricing advantages, importing Russian oil is suddenly becoming significantly more expensive, and that's putting fresh pressure right back on national fuel price stability.
But here's what's fascinating. Despite that vanishing discount, Russian oil remains stubbornly high in India's import basket. It's been hovering right near 36% across the last couple of financial years. When a country completely scales its logistics, its payment mechanisms, and its literal refinery processes to handle a specific type of crude, untangling that dependency takes time. Even when the economic incentives dry up, you can't just flip a switch.
And this heavy reliance has triggered some serious friction with the U.S., which adds a very complex layer of geopolitical risk for investors to price in. The U.S. administration actually imposed an additional 25% tariff on Indian exports in August 2025, and there have been public threats of raising those tariffs to 500% if India keeps importing Russian crude. So we're looking at a very high-stakes standoff between two strategic partners over energy flows.
Looking at this completely objectively, India's defense of this sourcing strategy is strictly grounded in their own domestic economics. As the Ministry of External Affairs points out here, their supreme priority is protecting 1.4 billion citizens from volatile global energy prices. Their stance is essentially that this strategy is simply about diversifying supply to find the best deal for the Indian consumer, regardless of the geopolitical heat.
Which brings us to Section 3, the domestic infrastructure defense, hardening the homeland. Geopolitical maneuvering is only ever a short-term fix. So what is India doing domestically?
Well, to buffer against these market shocks and manage future demand, they are aggressively expanding domestic infrastructure. This includes building out strategic petroleum reserves, SPRs, designed to hold a 90-day supply buffer. They're also expanding their refining capacity by 20%, aiming to reach 309 million metric tons per annum by 2030. All while simultaneously investing in overseas oil and gas assets to secure the supply right at the source. It's a huge, multi-pronged defense strategy.
And here is a really interesting twist. Processing all that imported crude has actually transformed India into a massive export powerhouse. Notice this surge.
Petroleum product exports to Europe skyrocketed from just under 10,000 metric tons in 2018 to nearly 25 million metric tons by 2024. It's highly ironic, right? While the West sanctioned Russian crude, Europe increasingly ended up relying on Indian refined products that were derived from it.
But being an import-dependent refining hub, however profitable, still leaves the country fundamentally exposed. And that brings us to an absolutely crucial concept for this explainer: energy sovereignty. As a definitive policy goal, the Indian government aims to achieve total energy independence and self-reliance by 2047, which marks exactly 100 years of Indian independence.
So let's look at Section 4, the 2047 Energy Sovereignty Roadmap, and the structural opportunity this creates.
This timeline maps out the aggressive structural pivots they're banking on. They've already achieved a 20% ethanol blending target in 2025, which, by the way, was 5 years ahead of schedule. By 2030, they're targeting 30% electric vehicle adoption alongside that expanded refining capacity we talked about. All of this sets the stage for the ultimate goal: complete energy independence by 2047.
Reaching that 2047 milestone requires strict, flawless execution of a few concurrent steps to fundamentally reduce their structural demand for imported oil. It's not just about, finding different countries to buy oil from anymore. It's about scaling alternative domestic fuels. It's about fundamentally rethinking and expanding public transit and aggressively electrifying both personal vehicles and the heavy freight industry. It's a total systemic overhaul.
So I'll leave you with this provocative thought as you price in these short-term market risks against India's monumental grain ambitions. As the discount on Russian oil vanishes and trade tensions with the U.S. really start to heat up, the clock is ticking. Can India's rapid push toward renewables and transport electrification move fast enough to insulate 1.4 billion citizens from a volatile global oil market? It is a massive challenge, but as we've seen today, the roadmap is clearly laid out. Thanks for joining me on this explainer, and definitely keep an eye on these milestones, because they're going to shape the global energy market for decades to come.